Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, just when you try to wrap up one trading month, it's time to look ahead to the next one. September brings some interesting hurdles as far as the stock market is concerned. Just how will they impact the market? We're going to try and find out from our stock strategists, Tracy Reinick and Todd Bunton, and our senior equity strategist, Nick Kalivas, who joins us at the roundtable this week. So as far as interesting hurdles are concerned, we've got the first one being on the 6th of September with the employment report that comes out, and then mid-month you've got the FOMC meeting, some German elections taking place through the month, and then September 30th, the U.S. government spending authority ends, and the whole debate probably sometime early September, mid-September will get underway as far as that's concerned. So Nick, September historically already the worst month for the stock market. Given these hurdles that I just mentioned here, is history going to repeat itself?
I think it's going to be a choppy September because I think the key thing really is I think Washington with fiscal policy. I think that's going to mostly scare the market. It has the potential to scare the market the most. To be honest with you, I think the Fed is priced. I think what happens on the 18th is either they announce their tapering and we're like, okay, we knew that was going to happen, or they don't taper and we're surprised by that, and those would be two positive outcomes. So I'm not so much worried about the Fed as I am the rhetoric out of Washington and just what happens on the fiscal side.
Yeah, Tracy, Nick, and you and probably Todd will even agree that up through the end of August here is pretty much a news-driven market. But as far as what it would take for investors to shake their bearish mood, you say news, but what kind of news?
Well, there isn't really much right now. That's why I think we're going to kind of stay with this more bearish, negative slant for till the end of the month, basically. But you never know what's going to pop up. But there's nothing really on the calendar that's going to change anything. I mean, we had Jackson Hole, and that was basically a non-event. Did anyone even know Jackson Hole? What was that? Nothing.
Right.
So I just think investors are kind of on the sidelines. They always wait until September to really come back in and start paying attention again, and you just listed off all the things that they're going to really be paying attention to. Yeah. And I do agree with Nick that it's going to be, the fiscal debate again is already heating up. The Congress isn't even, they're on vacation. They're not even back in Washington. Already barbs are being tossed around. Right. So we've been here before. It's always, an issue for investors because it's uncertainty. But, I'm looking to see if people are going to be just kind of exhausted by this debate again, because this is like the second or third time that we've had this, where they've threatened the shutdown, give us this, give us that, or whatever, and nobody knows what's going on. So, I mean, that's definitely going to be one of the key factors in the next couple
Todd's a little more specific as far as what it would take for investors to shake their bearish mood. It's going to take the Fed giving some definitive guidance as far as taper, right?
Yeah, I do, and I'm not so sure that the taper is priced in yet. And I don't think the Fed knows if it's going to taper yet. And like you said, the jobs report, September 6th, that's going to be a key report because
that's going to go right to the taper timeline.
Absolutely, yep. And then they meet September 17th and 18th, and then you'll find out. A lot of people do expect a September taper. I'm not sure if the market had priced that in until recently, because if you take a look, stocks were at all-time highs, and then every time a Fed official comes out and says, yeah, we'll probably taper in September, stocks drop. And then you'll get another guy saying, no, we're probably going to hold off. Okay, stocks rise. So that to me is the key market driver. And yes, there are a lot of other wild card factors in September, but the FOMC meeting September 18th is the one I have circled on my calendar.
Still the big one. All right. So given just a quick rundown of these hurdles that are on the docket, Tracy, what's the bull case here for the market? You said the bulls are still in control.
I'm kind of bearish here. Well, they are, because we've kind of just paused. We've had a slight pullback, but it's not been a huge bear pullback.
Yeah.
But that's because, the bears, the bulls are still in charge. But we've got all these things that are going to be happening in September. And now with earnings season basically wrapping up, and earnings can be, the incentive to push stocks higher, but it was not a good earnings season. So, and now it's over. So I don't know what's going to bring the bulls back to try to test those highs again.
Nick, is this a correction we're in?
I think it is more of a correction phase that we're in. I would say the bull story is the big picture story. There's still nowhere really to compete with stocks. I mean, cash yields are low, bond yields are still low. More constructively, I think it might be the PMIs out of Europe and China. It does look like Europe is doing better. It does look like China is stabilizing. I mean, there's still a lot of uncertainty, but the direction in those purchasing manager surveys is going the right way, which is positive for earnings growth as we go into the back half of the year. And the third factor, which I think is a little constructive, is people are pretty quick to get negative on the market. I mean, if you look at some of the surveys and sentiment, bearish sentiment got quite strong on the correction. A lot of cash was built up the last couple of weeks. And so that might provide some cushion. So I look at those three things as the constructive in the face of all the uncertainty over the Fed and fiscal policy and that type of stuff.
You know, it's funny that you should mention that because Gloomy Todd, right next to you, actually sees the downside risk outweighing the upside potential at this point.
Yeah, and that's just it. It's
I mean,
risk.
I hate to put that moniker on you, but
No,
it is kind of gloomy.
I'm usually not gloomy. I'm usually pretty optimistic. But I just think right now that the risk outweighs the reward in stocks. And I'm not saying abandon stocks altogether. I think you have more of a stock picker's market. I don't think we're going to see double-digit pricing gains in the S&P 500, every 6 months like we've been seeing recently. I think those days are over. We're going to probably more track what we see in revenue growth. I think if you look at profit margins, those actually contracted a little bit in the third quarter, especially when you back out finance, which was the main sector that drove earnings this quarter. And revenue, best case scenario, I'm thinking maybe 5% top line growth. So, if you're getting 5% earnings growth and QE's coming off the table and you have fiscal concerns, I don't see the PE multiple expanding. So I think you see, maybe mid-single digit pricing gains over the next, through the back half of 2013 and into 2014. That's not that bad, though, especially when you consider alternatives like cash and bonds. It's not bad, but I think people have to lower their expectations a little bit. I think there's a little too much optimism overall out there.
Okay, well, thank you for that. And keeping in line with the theme of a stock picker's market, these folks are going to share their top picks for the week with you in our next segment.